Hi everyone, my name is Rashid. Today is the 27th of December 2024. I'll be going over, well, not a new series, but a reformatted series where I go over candlestick patterns. I had made these as shorts before. I'll be making this into a slightly longer form content type in a long form video. And the first pattern we're going to cover is one of the most famous short candlestick, like as in single candle patterns called the hammer. And there's a lot of people confuse the hammer and hanging man. I will cover that next, so it'll be clear what the difference is. Now, a hammer is always found at a correction or the bottom of a downtrend. A hanging man is a similar structure candlestick found at the top, which has slightly different qualities. Now, we can see from this chart, this isn't a particular downtrend, but this is a correction. We can see there was the uptrend here. This was a correction, and at the bottom of the correction was a hammer. After the hammer, there is an uptrend. This is typically what tends to happen. Not always. Let me make that clear. Nothing is 100% in this field. However, a hammer is a very bullish pattern, and the next slide will explain why. Whenever you see a hammer, and the longer the wick or the tail at the bottom is, the more bullish it is. And I will explain this as well. Typically, when you see a hammer at the bottom, this is indicative of a reversal upwards in the next or the next few candles. This is a very, very bullish candlestick. It is, as I mentioned, a bullish reversal pattern as it suggests a potential reversal of a downtrend or a correction back into the uptrend. The characteristics of the hammer are it has a small body at the upper end of the candlestick. So if we go back here, we can see at the upper end of the candlestick, there is a small body. It has a long lower shadow, and it's typically at least twice the length of the body. That's usually the consensus. And ideally no upper shadow, but a little bit of upper shadow is acceptable. It indicates buying pressure, since despite the price dropping during the session, the market closed near the opening price, or at least much higher than the low, because it shows that there is buying pressure upwards. Towards the at the later end of the market session, the buying pressure lifted the price up a lot, showing buying interest. And again, as I mentioned, the location matters. The hammer is found after a downtrend or correction. It signals that the sellers are losing or lost control, and buyers are now stepping in. The longer the lower shadow, the stronger the potential reversal signal. And as I mentioned, this indicates that while bears push the price down in the end, bulls regain control by the close, suggesting a shift in market sentiment. That's all for this video. Thank you for watching. Enjoy, and I will see you in the next one.